Living off dividends is a dream. Your money's invested in an income-producing asset. On top of that, it can multiply your money without you having to do anything. In fact, it's making you passive income that you can either keep as regular income or reinvest. Hey, welcome to Stock Market Mate. Before we start the video, make sure to subscribe to the channel and hit the notification bell to help us beat the YouTube algorithm. If you're done with that, then let's get right into it. Dividend stock investing has definitely gained a serious head of steam in the last 10 years. Its strategy is simple. You buy stocks that are paying dividends and have been growing those dividends for a significant number of years in the past. Dividend growth investing is all about paying up today for an income stream that will keep growing well into the future. The thought of receiving truly passive income in the form of dividends is pretty attractive. Just the thought of being able to receive enough money in dividends to either pay most or all of your expenses, as well as making enough to live a fuller life without being bogged down by a job, is a pretty big dream to a lot of people. However, there's a serious drawback to dividend growth investing. If you're already a seasoned investor, you might already know what we mean. And this is to be able to live off dividends either partially or completely for your income. This requires a massive stock portfolio. And by massive, we're talking hundreds of thousands of dollars. Needless to say, this is pretty discouraging to a lot of investors. So, bottom line, is living off dividends even possible? Well, we're here to answer that question today. Before we start, help us out by clicking the like and subscribe button. If you're done with that, let's get right into the video. Right off the bat, you must be wondering, can I really live off dividends? Actually, yes, you can live off dividends. It takes a combination of factors to make it happen. If you execute all these, you'll be living off your stream of dividend income faster than you might believe. Living off of dividends is not a get-rich-quick scheme though. We're sorry to tell you that this takes time to accomplish. That's why it is important to start early for a successful dividend retirement plan. Now let's get on with the details of how to live off dividends so you can do it too. How to live off dividends. To get started, you need to sign up to a broker. This is simply a platform or company that allows you to buy stocks. If you're in the USA, it's best to start with something cheap like Robinhood or M1 Finance. If you're from Canada, Questrade is a great way to start. And lastly, if you're from Australia, you can try out Stake or simply a bank. Overall, start with a cheap but secure broker. However, this is more than just focusing on the technical guide. We also need to develop the proper mindset. First of all, cultivate the motivation to live off dividends in the future. Then you need to take action with your finances now to prepare for living off dividends. Next, you must execute a dividend stock investing plan to achieve your goal. Start doing these 3 things today, and you will be living off dividends in the future. Remember that time is your best friend when building a dividend income for early retirement. So, start early in life. Number 1. The motivation for living off dividends. 2 words: passive income. This is probably the biggest advantage of investing in dividend stocks. You can treat dividends as a passive income, which means getting paid without doing any work. For the people looking for a few alternate secondary sources of income, dividend investing is the answer. Another motivation would be having steady income. Profits from stocks are only on paper unless you sell them. This money's not in your bank account. The profits or loss are unrealized until the final settlement. However, dividend stocks add steady income in your pockets without worrying about selling any stock. Dividends can also be an important part of your retirement income strategy. Furthermore, dividends from dividend-paying stocks offer many important advantages for an investor. Well, there you go. Just enough reasons to convince you, but you must find your own motivations too. Number 2. How to live off dividend stocks. When living off dividends, it is best to put the odds of success in your favor. Here are a couple of areas to consider while you're working and preparing for living off dividends in retirement. If you want to retire on dividends, it is important to avoid consumer debt. So, live within your means and get all credit card debts paid off. Buy used cars and drive them for a long time. This will help to eventually eliminate car payments. Your mortgage debt is okay. Shop around for the best rate when applying for a mortgage. Interest rates are at all-time lows. So if you already have a mortgage, consider refinancing to save money if you haven't done so already. However, do not refinance and take cash out. Your home is not an automated teller machine. Ultimately, being mortgage-free will also be a big plus when you're living off dividends. Pay your mortgage off based on its terms, and you should be fine. Finally, keep a close eye on your credit score. Be sure to monitor it on a regular basis. Next, you should determine your annual expenses. To know how much dividend income you will need, you need to know how much money you spend. There are a couple of ways to determine what your expenses will be in retirement. It is useful to estimate your expenses using the 80% rule. This rule states that you need 80% of your earned income in retirement. Why 80%? The rule assumes some of your costs will be eliminated once you retire. For example, you will not have the costs associated with commuting to and dressing up for work. The 80% rule is easy to apply. It can give you a quick answer. Number 3. Dividend stock investing. Buying the stocks of companies that pay steady dividends is one of the best ways to invest. Because you're investing for slow, steady payments in more mature companies, some might even call dividend investing boring. But steady returns are never boring. Earlier generations of investors favored dividend investing, and while those early generations enjoyed generally higher yields than are available today, there are still plenty of benefits to a dividend investing strategy. So how can you pursue dividend investing? If you'd like to start generating income with dividend investing, you might implement one of the following 3 strategies. Number 1 would be aim for high dividend yields. This is the classic strategy for dividend investing. The focus here would be on slow-growing established companies with a lot of cash flow that pay high dividends. These kinds of investments make sense when you're looking to generate income right away. Just keep in mind that high yields aren't everything. The companies may not see as much growth in stock value as other companies with lower dividend yields. Choose high dividend growth. Investors with a longer time horizon can focus on buying stocks in companies that are growing quickly but currently pay lower than average dividends. This won't yield as much income in the short term. But as a firm grows and its business matures, the dividend yield should rise gradually. Getting in early means investors can buy more shares and eventually earn more dividends. The cheaper cost on yield makes this a better long-term investment strategy. Pursue dividend capture. Dividend capture is a more active, hands-on approach to harvesting dividend income. With dividend capture, it's not necessary to hold shares of a company for a whole year or entire quarter to earn the dividend. Instead, you swoop in and buy them right before the dividend is paid out. Then once you're paid, you sell them again so you're able to buy other stocks. But this isn't as easy as it sounds. To earn a quarterly or annual dividend payment, you must own a stock before the ex-dividend date, which is typically 2 weeks before the dividend is paid. Then, after the dividend is paid, you have to decide when to sell. This gets complicated and risky because share prices are volatile and may be lower once the dividend is paid than when you bought them. Share price declines like this can easily wipe out the money you earned from the dividend, or more. And even if your shares increase in value, if you're not trading in a tax-advantaged retirement account, dividend capture can generate short-term capital gains that are taxed at the higher regular income rate. Holding dividend shares allows you to live on the profit from them alone if you start investing 15 to 20 years before giving up other sources of income, such as wages, profits from your own business, and rental income. Living off of it may be feasible depending on your expenses, income needs, and asset level. However, it's essential not to let dividends drive your entire asset allocation strategy. Doing so could not only jeopardize your income stream, but also your entire portfolio. As you evaluate how to retire comfortably or achieve financial flexibility, reconsider the importance of living off dividends in your financial plan. It may not be as essential as you think. Well, that's about everything. If you found this video helpful, kindly click the like and subscribe button, and also consider turning on the post notification bell to be updated on our new stuff. Until then, we'll see you in the next video. If you enjoyed this video, you're going to want to watch one of these 2 videos right here. Enjoy!